Hello, welcome to Disruptive Stocks. Our goal is to help our audience to invest in disruptive businesses to create higher value than the average market returns. Subscribe to the Disruptive Stocks channel and like this video. We will provide you with huge value. In this video you will learn about cryptocurrency overall and about Bitcoin. Stay until the end as I will provide you with the prediction long term for Bitcoin. What is cryptocurrency? Cryptocurrency is a form of payment that can be exchanged online for goods and services. Many companies have issued their own currencies, often called tokens, and these can be traded specifically for the good or service that the company provides. Think of them as you would arcade tokens or casino chips. You'll need to exchange real currency for the cryptocurrency to access the good or service. Cryptocurrencies work using a technology called blockchain. Blockchain is a decentralized technology spread across many computers that manages and records transactions. Part of the appeal of this technology is its security. How many cryptocurrencies are there? What are they worth? More than 6,700 different cryptocurrencies are traded publicly, according to CoinMarketCap.com, a market research website. And cryptocurrencies continue to proliferate, raising money through initial coin offerings, or ICOs. The total value of all cryptocurrencies on February 18, 2021, was more than $1.6 trillion, according to CoinMarketCap, and the total value of all bitcoins, the most popular digital currency, was pegged at about $969.6 billion. Cryptocurrencies by market capitalization. These are the 10 largest trading cryptocurrencies by market capitalization as tracked by CoinMarketCap, a cryptocurrency data and analytics provider. Bitcoin has $1 trillion market cap. Ethereum $222.3 billion market cap. XRP has $24.4 billion market cap. Litecoin has $15 billion market cap. Chainlink has $13.3 billion market cap. Bitcoin Cash has $13.1 billion market cap. 3. Why are cryptocurrencies so popular? Cryptocurrencies appeal to their supporters for a variety of reasons. Here are some of the most popular. Supporters see cryptocurrencies such as Bitcoin as the currency of the future and are racing to buy them now, presumably before they become more valuable. Some supporters like the fact that cryptocurrency removes central banks from managing the money supply, since over time these banks tend to reduce the value of money via inflation. Other supporters like the technology behind cryptocurrencies, the blockchain, because it's a decentralized processing and recording system and can be more secure than traditional payment systems. Some speculators like cryptocurrencies because they're going up in value and have no interest in the currency's long-term acceptance as a way to move money. Are cryptocurrencies a good investment? Cryptocurrencies may go up in value, but many investors see them as mere speculations, not real investments. The reason? Just like real currencies, cryptocurrencies generate no cash flow, so for you to profit, someone has to pay more for the currency than you did. That's what's called the greater fool theory of investment. Contrast that to a well-managed business, which increases its value over time by growing the profitability and cash flow of the operation. For those who see cryptocurrencies such as Bitcoin as the currency of the future, it should be noted that a currency needs stability. As NerdWallet writers have noted, cryptocurrencies such as Bitcoin may not be that safe, and some notable voices in the investment community have advised would-be investors to steer clear of them. Of particular note, legendary investor Warren Buffett compared Bitcoin to paper checks. It's a very effective way of transmitting money and you can do it anonymously and all that. A check is a way of transmitting money too. Are checks worth a whole lot of money? Just because they can transmit money? For those who see cryptocurrencies such as Bitcoin as the currency of the future, it should be noted that a currency needs stability so that merchants and consumers can determine what a fair price is for goods. Bitcoin and other cryptocurrencies have been anything but stable through much of their history. For example, while Bitcoin traded at close to $20,000 in December 2017, its value then dropped to as low as about $3,200 a year later. By December 2020, it was trading at record levels again. This price volatility creates a conundrum. If bitcoins might be worth a lot more in the future, people are less likely to spend and circulate them today, making them less viable as a currency. Why spend a bitcoin when it could be worth 3 times the value next year? Are cryptocurrencies legal? There's no question that they're legal in the United States, though China has essentially banned their use, and ultimately whether they're legal depends on each individual country. Also be sure to consider how to protect yourself from fraudsters who see cryptocurrencies as an opportunity to bilk investors. Now let's get into Bitcoin. What is Bitcoin? Bitcoin is a digital currency that many call the best cryptocurrency to buy, dubbing it the new gold. Of course, gold is one of the oldest currencies on Earth, and currencies and methods of payment are always evolving. What does this mean? Arthur Salzer of Northland Wealth Management offers, monetary value usually arises from objects that are scarce, durable and relatively easy to divide. Since the dawn of civilization, societies have used rare seashells, wampum, glass beads, and stones as money or a form of record keeping. Gold is an ideal example since it can be made into jewelry, coins and bars, but Bitcoin is unique in today's digital world since it is scarce, durable, has strong privacy characteristics. These days, gold is rarely used as a form of payment, it's seen more as a store of value, and an investment or portfolio asset that is not highly correlated to stocks and bonds and cash. Similarly, supporters and owners of cryptocurrency invest in Bitcoin because they see it as a store of value, and a useful portfolio asset. Bitcoin may also work its way into a direct method of payment as well. In other words, you might one day use Bitcoin to buy a car or a loaf of bread. It's a lot quicker and easier to send digital money than to lug around bars of gold. How is Bitcoin mined, exactly? Programmers, Bitcoin miners, have to locate the new coins and then perform a series of complex mathematical equations in order to unlock the new coins. These miners collectively are also required to confirm ongoing Bitcoin transitions, verifying the details. As noted above, millions of digital eyeballs are on each transaction. But in the end, only one miner or miner group, called a node, will be rewarded with the new issue of Bitcoins. The successful miner walks away with the new coins, and the group of confirmed and verified Bitcoin transactions, the block, is added to the existing record chain of transitions. That is how we get to the name and technology known as the blockchain. The potential for Bitcoin investors. Bitcoin has delivered mind-boggling returns from its inception. If you consider it an asset or an asset class, it has been the best performing for many periods over the last 10 years. The following table takes us to the end of November 2020. Bitcoin then went on to add another 50% in December of 2020. How widely accepted is Bitcoin today? In July 2020, Michael Saylor, the billionaire founder of MicroStrategy, an American corporation that offers software-based solutions to client companies, directed his company to hold part of its cash reserves in alternative assets. By September, MicroStrategy's corporate treasury had purchased Bitcoins worth $425 million. Square, the San Francisco-based payments company, bought Bitcoins worth $50 million in October 2020. More recently, PayPal announced that American users can buy Bitcoins, as well as hold and sell it in their PayPal wallets. Every week we see more major financial institutions come on board. Is Bitcoin safe? And more final thoughts on Bitcoin. Bitcoin is an incredibly volatile but explosive asset. That's why you might not need an aggressive allocation for Bitcoin to have a considerable impact on your portfolio. And given that Bitcoin is likely near all-time highs at the time of this post's initial publication in January 2021, you might simply dollar-cost average into your position. You might be offered lower prices in the future. But if Bitcoin keeps mostly rising, then you're making money on the way up. That's not a bad deal, either. If you're interested in going deep into Bitcoin, have a read of the Bitcoin Standard from Saif Dean Amis. Given its explosive nature, you might develop an exit or rebalancing plan as well. I invested at a weight of 2% with plans to add more. But the recent surge in Bitcoin price quickly took me to over a 6% weighting. I may trim the Bitcoin holding when it reaches a 15% weighting, reducing it to 10%. When or if it moves to 15% again, trim back to 10%. Rinse and repeat. My risk is managed, as I am then in a very positive position at the very first trimming, even if I were to lose the remaining position. Disclosure: I have invested in Bitcoin by way of the 3IQ funds. Now the important part: what are the predictions of Bitcoin long term? P. Morgan's long-term price target for Bitcoin in January. J.P. Morgan released a note to clients putting a theoretical, long-term price target on Bitcoin of $146,000 as Bitcoin begins to compete with gold. Gold is broadly accepted as a safe haven asset where investors flock to in times of political strife or financial market turmoil. Bitcoin is now beginning to develop such a reputation. Bitcoin is competing with traditional gold. Bitcoin is a form of digital gold. Nicolaus Panagurtzoglou, global markets strategist at J.P. Morgan, told CNBC's Beyond the Valley. He said that the value of gold held by the private sector, solely for the purpose of investment, is around $2.7 trillion. For Bitcoin's market cap to reach that, it would need to hit a price of around $146,000. But there are caveats, the biggest one being the volatility in Bitcoin's price. The digital coin is known for wild swings in price. Panagurtzoglou said Bitcoin has 5 times more volatility than gold. The key to Bitcoin's volatility converging with gold is institutional adoption, the J.P. Morgan strategist said. The faster the pace of institutional adoption, the quicker that convergence in volatility will take place, he said. Still, there are risks ahead for the current rally. While it has been driven by institutional investors, retail participation has also been high. The biggest risk is that the flow impulse we've seen over the past months slows materially from here, Panagurtzoglou said. In particular, when the economies reopen, people go back to the office, they have less time to trade at home, and as a result some of that retail flow impulse slows from here, he added. The Bitcoin bull's prediction that Bitcoin could hit $1 million is based on a few factors, including the scarcity of the cryptocurrency, which has a cap of 21 million coins, as well as the decentralized nature of the technology. There is no central authority like a central bank that controls Bitcoin. Instead, the so-called Bitcoin network is made up of miners who process transactions. These miners operate a vast array of specialized computers required to carry out the Bitcoin mining process. As there are many different miners, no single entity can control the network. And because the computers they use are often very powerful machines, Bitcoin proponents claim the network is one of the strongest computer networks in the world. To summarize this for you: high risk, high return. Take the decision to invest or not. I hope you enjoyed this and it was informative. Subscribe to the Disruptive Stocks channel and like this video.